The Bank of England has raised interest rates for a historic 12th time in a row, up to 4.5%, driving the cost of living crisis from our energy and supermarket bills to our mortgage rates and sky-high housing costs too.
What has happened is that there has been a very big hit, a shock, negative shock, to our national income, caused by rising import prices, caused by events going on around us externally. That gets brought into, in a sense, brought into this country this via higher inflation, which is reducing our national income. What we have to do is deal with the inflationary issue that we obviously are confronting. And I will say this, it's very important that we deal with it because persistent inflation is much worse.
People like Becky McLean have already been struggling with the cost of living crisis. Now higher interest rates mean her mortgage payments will almost double this summer.
I did panic to begin with. I did think, where's that money going to come from and how am I going to do that?
So who are these guys?
So this is Ralphie.
Becky is a single mum in Yorkshire. She's worked hard to buy a house for her and her little boy. Her mortgage used to cost her £700 a month. Now she'll have to pay over £1,300.
There's still some bits to do, worktops. You pour your heart and soul into a home. It's not just a house. It's a home where my little boy is raised, where we create memories, we have a dog, we play games. And to then make the decision that, well, I might have to sell it. It's gut-wrenching.
Most UK homeowners have borrowed money on fixed-term mortgages. That's meant despite rates going up, they haven't felt the pinch. 2.5 million people will be exposed to much higher rates this year, and 1.7 million of those will come off fixed-rate mortgages and see massive jumps like Becky's. Is Becky just collateral damage in the fight against inflation?
No, I am very sensitive to the situation that people like Becky are in. I'm also very sensitive to the fact that this inflation hits those who are least well off hardest. And it's, you obviously quote mortgage costs, but also an important part of this is that this inflation is concentrated in what I call the essentials of life, food and energy. And people on lower incomes have a higher proportion of those essentials in their consumption than others do, because they are the essentials of life. That's the point of it. What I would say is that unless we reduce inflation and bring it back to its target, it will get worse and it will go on for longer, and that's not a situation that anybody should want.
The bad news they'd been expecting was confirmed today.
That was the housing crisis back in the 1990s. It was deep and long, and it impacted almost all homeowners.
Every day last year, an average of 200 homes were repossessed.
Then mortgages typically changed every time the bank raised rates. It was economy-wide, but it was gradual. This upward march in interest rates represents a massive hit to millions of people. The Bank of England is taking a bet that it's not going to derail the economy or crash the housing market. But it does mean that the burden of taming inflation will rest on a much smaller group of people. The Bank of England said today that repossessions won't return to the bad old days of the 90s. But the decade and a half of cheap money has now also gone as well.
They've been in a period of time where we've essentially been accustomed to low rates. And it's almost a sense that in the future, rates will return back to where they were before. Unfortunately, that's not the case. People will struggle. When we take into account where wages haven't gone up, the cost of living, utility bills, and then naturally mortgage rates, all these things are going to have an impact.
Today, the politicians weighed in too. All the way from Japan, the Chancellor was keen to point out that inflation would halve this year. Just.
That's why it's so important, if we're going to bring certainty back to family finances, stop prices rising, that we stick to our plan to halve it.
But the Shadow Chancellor said she was worried about the impact of bank policy.
People have paid £1 billion more in mortgage repayments compared to where they would have been 6 months ago.
A lot of these decisions.
For Becky, the rights and wrongs of economic policy matter less than the frustration she feels about what it means for her family and a growing sense that things won't improve for her anytime soon.
Not everybody has a lot of cash. Not everybody has a lot of income. Not everybody has a two-person income. What do you do when you're on your own? How do you make those decisions? Nobody can predict the future, but is it okay to be sacrificed? No, it's not. It's not nice, of course it isn't. It's hard, and is it going to get better? I don't know. I'd like to say yes. Is it going to become easier for me? I'd like to say yes. But right now, no.
And her fears may prove correct. Financial markets are currently betting that there will be yet another rate rise to come before the summer is over.
And Helia is here with me now. Helia.
Kathy, the bank came in for a lot of criticism today on their ability to tame inflation and coming in late to the party on comments made by the bank about people having to accept being poorer because of inflation, and even questions about the credibility of the institution. But ironically, as you were saying earlier, today we saw the biggest upgrade of growth that the bank has ever delivered. Let's take a look at what they thought back in February. You see that there was negative growth this year, negative growth next year, basically flat in 2025. Today, no recession, Kathy, no net quarters of negative growth, cumulatively an extra 2.25% of growth. But before you break out the champagne quite yet, that's still quite paltry when you're talking about growth. If you look at 2019, growth was 2%, and that wasn't even high by historic standards.
Well, that's the picture on growth. Tell us more about inflation.
Well, the big story that came out of today was food prices. They are proving incredibly stubborn. Food price inflation at the moment is running at about 20%. And that's despite the fact that energy prices have come back down, as the bank had expected. Now, remember, Kathy, that when prices are higher in the supermarket shelves, people are more likely to ask for pay rises. And that is the kind of spiral of inflation that the bank is so desperate to avoid.